Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Hey, good morning, everyone. Welcome. Thanks, everyone, for joining. Welcome. It's Friday morning. We're going to get started in just a couple minutes here.
Hey guys, good morning, welcome to the live session of Stocks Never Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.
Recording in progress.
Hey, guys. Welcome to Stocks Never Trading. My name is Ron. My partner is Dave. Good morning, guys. It's almost 7 a.m. Eastern on this Friday morning, July 25th. We're almost done the month of July, and next week it gets really, really intense with a lot of high impact news throughout the entire week. So we'll briefly go over that so that you guys can kind of think about a trading plan over the weekend and how you're going to navigate next week, because it's got a lot of high impact news. But we got to get through Friday today, and Friday is traditionally can be a tough day in the markets, but we can make it an easier day to trade just if you use proper risk management. That's it. That's the secret sauce right there. Just use proper risk management when you're trading, okay? And today's plan is we're going to look at gold. Right now it just dropped down to a low of 3,340. And we'll see, maybe it's in a little bit of a downtrend right now, making these lower lows and lower highs on the 5 minutes. So we'll do a complete top-down analysis starting from the daily, hourly, and bringing it down to the lower time frames, the 5 minutes. And we can maybe flip-flop from the 5 and the 1 minutes. And then we'll do the same thing with NASDAQ and US 30 as we approach Wall Street hours, okay? But we have to go over all the news today. Make sure that if there's any earnings or things like that. Normally Friday after hours, there's no earnings. But Friday pre-market, there is some earnings today, okay? So let's get into this, and then we'll start to see how the markets are moving, okay? And some of you guys may be in a trade right now. I'm not. We'll get to it, and we'll take a look together, okay? So first thing is starting off the day. My routine is always starting off with a coffee. I got my Tim Hortons coffee here. And my other routine, my daily routine, is looking at the morning news to see if today is going to be a high impact day. Am I going to be trading this session and I'm going to be walking into any news? I want to be aware of that because I don't want to get into a trade or be in a trade and then there's high impact news and could affect my trade. So it's just preparing yourself. You don't have to spend an hour to do this. Just briefly, a couple minutes, just go over. Here's today's news, July 25th. We had some news coming out pre-London. Right here, some British news. Retail sales came out a little lower than the forecast. Better than the previous month, but lower than their forecast. We had some German news. We had some European M3 money supply year over year come out. We had some private loans come out. And then this is going to be our session that we're trading into. So normally there's some North American news at 8:30 a.m. Eastern. We do have 2 US folders. They are not red folders, high impact. They are medium. This is a orange folder. They're medium impact, okay? But We still gotta consider them when we are trading. We have core durable good orders and durable good orders. So again, that word core, it's gotta exclude something. So it's a change in total value of new purchase orders placed with manufacturers for durable goods, excluding transportation items. Okay, so when we're talking about core durable goods, it's everything purchase orders placed with manufacturers for durable goods, excluding transportation items. And then our next one is, you see it doesn't include core. So it's our durable goods. It's everything that we had here and will include transportation items. Okay, and then we'll see how everything comes out. Again, it's not a high impact, but it's still medium impact, so it could still affect the US dollar. Okay. And that's our news today. Okay, we don't have anything but in New York. We don't have post New York. We don't have anything in the afternoon. Okay, so it's going to be a Friday. Treat Fridays with proper risk management, because they can be those trap days that you have a tough Friday and then you get back and then you have a really bad trading day and then you got to go into the weekend and start next week off. So with we always say, if you're ahead of the game, if you did well this week, you're maybe above your weekly target or you're at your weekly target, don't piss it all away on today just because it's a Friday. Okay, trade smart. The whole point of trading is to compound your account, to grow your capital, because those little 0.5, that 1%, that realistic daily goal that traders can achieve on a daily basis, it's all a matter of capital. So if a trader is doing it with $1,000 account, what happens if that trader compounds their account to eventually $5,000 and that same 1% starts adding up to more money? What about that trader continues to compound that account in a couple years and it's at $20,000 and he's still aiming for that 1%? And you guys understand what I'm saying. So eventually maybe some of you guys are going to get your account capital to 50,000, maybe even eventually 100,000. Now that little 1% on $100,000 account is 1,000 US dollars per day. So it's just, again, it's a game of percentages and it's just a matter of capital. Okay, some of you guys can trampoline that and you don't need to start off with $1,000 and work your way a couple years to get up to 5,000, 10,000, 20. Prop firms are there. That's your leapfrog. That can help you catapult to get to that 25,000, 50,000, 100,000 working capital. But you still got to follow their daily draw limits. But if that's how you want to do it, that's how you can do it these days. Back in the days, there wasn't too many prop firms available, so you had to compound, starting off with $1,000 and little step by step. It works, guys. I know it takes a long time. And then you come in with that negative attitude saying, well, I only have $1,000. How am I going to compound this to 5,000? You got to start somewhere. You got to start. You got to go from 1,000. You got to go and earn $25 today and get it to 1,025. And next day, maybe you get it to 1,075. Who knows? By the end of the week, maybe it's $1,100 in there. And just slowly, it's a long grind. That's the way how trading works, guys. You're not going to just get $1,000 and then tomorrow you're going to flip it into $100,000. Okay. So it takes a lot of time. Okay. Time, discipline, patience. Okay. So that's our news for today. What I was alluding to is next week. Next week is the big week, high impact big week. So let me just briefly go over it so I can help you guys. Some of you guys might have a busy weekend. I'll do it for you. So starting Monday, look at Monday. Look at how dead Monday is. Okay, it's like the calm before the storm. Monday morning, July 28th. We have basically no news on the schedule. It starts to pick up on Tuesday. The reason why I know it starts to pick up on Tuesday is because we're getting to the end of the month and we're starting a new month in August. And more importantly, Tuesday morning, we have JOLTS job openings. So when we have JOLTS job openings, it's kind of, when I see this every week, it's a number of job openings during the reported month, excluding the farming industry. And if you don't know what JOLTS stands for, it's Job Openings and Labor Turnover Survey. So when I see JOLTS, what is coming, guys? When you see JOLTS job openings, what is coming that week? Okay, right away when I see JOLTS job openings, I know what's coming up that week. NFP Friday, okay? When you see JOLTS job openings in the US, you know NFP is coming up, okay? But that's not all we have next week. We have also Wednesday is a probably one of the biggest days. I would say how everything is developing right now with Powell and Trump, it is FOMC, the actual FOMC, where it's not the summary, the minutes we had a few weeks ago. This is the actual real stuff. Okay, so here it is. Wednesday next week, July 30th, 2 p.m. Eastern. We've got the U.S. high impact red folders, federal funds rate. Now you see it's not a summary, it's not minutes. You actually have the funds rate. There it is, 4.5%. We're seeing right now the forecast is a pause. No increase, no decreases in the forecast. However, we had good employment numbers coming out. Inflation is going down. All of these things we've been seeing lately. And Trump is really pushing Powell to lower these rates. So if we get a 0.25% decrease and we get 4.25%, the markets could see that as very positive, and we might have a stock market continue to go up. However, if they pause, then we'll see how the market reacts. I don't think we'll see an increase. That's probably off the table right now, but a pause or a decrease is on the table. Okay. Right now they're showing us a forecast of a pause. And then it's not over. Then at 2:30 p.m. after they release this, then Mr. Powell comes to the podium, and that's when we see what color tie he's wearing, and that's when he speaks. He gives forward guidance and he answers questions, okay? And then it's like what I was saying, it doesn't end there. So we have our JOLTS job openings, we have our FOMC event, we have Thursday, we've got our unemployment claims, and then we finish off next week with NFP. First Friday of the month is August 1st. It's also my dad's birthday. He'll be 79 years old. I'll be taking the old man out for his birthday. And we also have, right over here, you can see non-farm payroll. So the average hourly earnings, non-farm employment change, and then the unemployment rate. So already we have the previous numbers are out. We have 0.2% was the average hourly earnings month over month. We had NFP last month was 147,000 jobs were created. And then our unemployment rate right now is sitting at 4.1% in the US. We will see the actual forecast next week, and then we'll see the actual numbers. Okay, so that's what I mean, guys. Next week is a big week. Okay, and then we move into earnings too. So right now, let's see our pre-market earnings. We had Centene over here already report at 6 a.m. Eastern. Wow, what a disappointment on the earnings per share over here. They were expecting to make 68 cents earnings per share. Look at the actual report, negative 16 cents. So that's a huge bad report on the EPS. They did beat revenue, but the earnings per share has gone down. What caused that? Like, you got to look into that. You got to really dissect what caused that. I'm sure during the earnings call, they explained what happened here, or I'm sure that shareholders had questions regarding that. Growth was good. Look at the surprise, negative 123%. That probably had a lot to do with the EPS. And then this is what else we got going on right now. So a lot of these have already reported. AutoNation, HC8 Healthcare is coming out at 7:30. Charter Communications, Philips over here. So again, I'm going through this. They're not big familiar names like Tesla or Nvidia or Apple or Google. They're smaller names. I don't think these are going to have a high impact on the S&P 500 or NASDAQ or US 30. Okay. So if you're trading those individual securities, you're buying shares of the company, or you're trading options, pay attention to earnings, okay? Could dictate the movement of the market and also the forward guidance for the next quarter. And then just some news. Did anybody see this? This was one of the funniest things I've ever seen. This was Trump and Powell. The Fed is having some renovations. The Federal Reserve is renovating like $3 billion worth of renovations, and Trump kept adding things to it, and Powell kept correcting him. This was one of the funniest things If you haven't watched this, please watch this. After the call today, you guys will have a little bit of a laugh. Powell actually called him out. He called him out on all his lies. It was hilarious while it was live. It was really funny. It's funny watching these two clash. Did anybody watch it, or was it just me? Trump and Powell clash in public, then Trump takes a softer tone. Trump says it's not necessary to fire Powell after the Fed chair fact checks the president in front of the press. Yeah, he fact checked him because Trump is he tends to exaggerate a little bit, but he was just pulling numbers out of his hat, and then Powell just called him straight out, right in his face, right in front of the press. It was pretty funny. So good for Powell for holding his own and sticking up for himself. It's good. He is not going to be bullied by Mr. Trump. U.S. stock futures pause after record rally as Wall Street regroups. Google search is readying the next generation for AI, like the next generation AI. AI is pretty spectacular right now, and it's just going to continue to even advance. It's pretty scary how fast this thing is going. Americans are struggling to pay bills and feeling anxious about it. This is a report right here that came out 22 minutes ago. I don't think it's just Americans. I think it's everybody around the world. Everyone around the world globally is struggling to pay bills and feeling anxious about it. So that interest rate coming up, that in the FOMC next week is going to be pretty interesting to see what they're going to do. So guys, if you're struggling, you're not the only ones. This is global, okay? Inflation is getting out of control. The cost of everything is getting out of control. Cost of housing is getting out of control. Everything is getting out of control, okay? And at work, you're probably not getting raises. You're probably not getting bonuses and things like that. You probably got your steady rate, and then with the cost of everything going up, that's the depreciation of the dollar, so you got to really kind of learn how to stretch your dollar. I know our parents did it back in the day, so we got to learn too. Our generation probably is not as frugal as our parents were, but we got to learn how to stretch our dollar, guys. So, look for discounts, right? Just like when we're trading. Volkswagen cuts 2025 guidance after 1.5 billion tariff hit. So you can start to see these tariffs are really having an impact globally around the world. Volkswagen is cutting its guidance. Right here we had Centene shares fall after reporting surprise quarterly loss. Tesla had their earnings. Tesla first quarterly loss in the biggest quarterly loss in decades that they had. So it was pretty obvious to see it with everything that was happening with Elon Musk, but one of the biggest loss on paper in decades for Tesla. What else we got? Intel, they reported in the after hours yesterday, just after 4 p.m. Intel stock falls as chip maker cuts jobs. So look at guys, even tech, tech is in demand right now, and even Intel is cutting jobs. So, it's not just like blue collar work. It's not just factory jobs that are getting cut. Look at you got Intel is cutting jobs. I didn't see the number. I think it was 1,500 or 15,000. It's in this article here. But they're cutting. So they got to look at the bottom line, and they're cutting. So those people will be unemployed. And that affects the economy. Okay, that's the truth of it. That's how things work. What else we got going on? Valeo shares slump as car parts supplier cuts sales forecast. U.S. stock futures pause after record S&P 500 NASDAQ run. Investors weigh market impact of a possible early Powell exit. So a lot of analysts are thinking that maybe Powell is going to resign himself and just walk away. I don't know if he's going to do that. I don't think so. But, analysts are speculating on that. U.S. Gulf refiners seek Mid-East South American oil to offset Venezuela and Mexico losses. again, in the news, tariffs, Fed, tech results, headline jam-packed market week. So lots going on in the markets, okay? Especially with Tesla's earnings. What a disappointment. But if you had some puts on Tesla, you were walking into a pretty good trade. You had to see that Tesla sales were going down. A lot of shareholders were unhappy with Mr. Musk. People were not happy with him, so there was boycotts of Tesla. So that's going into earnings, guys. It's not rocket science, we say. It's just follow what's going on, pick a security and follow it. And then you can make some informed decisions. Okay, so that's there it is. Tesla's declining Q2 car sales sparks sell-off. That was the biggest quarterly loss in in 1 decade. So lots going on. Right now in the futures, pretty flat across the board. S&P futures, positive 0.08. Dow, similar. NASDAQ is 0%. So right now the markets are flat. Okay, so gold is the one that's in a negative 0.77% right now. We'll see if it will bounce back, or it could be a bearish day and continue to push down. Okay. Discord, guys, let's take a look at what's going on here. Okay, so we had on forex side, long USD JPY at 147 is running 80 pips. If you guys got it on the break, there's the break, and then if you waited patiently for the retest, you got the retest back at 147, and then it took off. So the second leg is considered to be the stronger one, and because that's the retest leg. This was the initial push, and then it retested and pushed for the higher high, but then it came right back down, and then that's where maybe the pending orders were accumulating. It picked them up, and then you can see how it took out that previous high and had a substantial high. So guys, it's simple trading. Just look for breaks, retests with confirmations, use proper risk management, and continue to look for this on a daily basis. With gold, we're looking for a buy. This was released at just 6:30 a.m. Eastern for buys around 33.45 to 40 in between there. So we'll see if we find some support in there. We'll see if we find a good bounce in there. So we'll take a look at that as well. Okay. And everyone on YouTube, thank you guys for joining. 100 viewers. If you guys wouldn't mind hitting the like button, if you guys do get value out of Stock Sniper Trading channel, we do appreciate it, and we want to be here on a daily basis with you guys, but we need the support from you guys. So if you guys can kindly leave us a like if you get value out of us, we appreciate it. And there is a free Telegram channel pinned at the top of YouTube for you guys. It's got all of our YouTube live. It's got trade ideas, setups for you guys as well, recaps of the trade setups. Thanks, guys, for all the positive comments on our YouTube channel. We do appreciate it, guys. And blogs, we did this one on wicks in trading, wick analysis, importance of high wicks, smaller wicks, what they represent, rejection, exhaustion, things like that. Guys in Zoom, don't forget today, this afternoon, we're going to have a crash course, 60-minute crash course on this specific topic on wick analysis. If you can join us, that would be great, but I know it's a Friday afternoon for you guys. I will have it recorded and it will be uploaded on the website this weekend if you can't make it, okay? Yeah, guys, so that's the free Telegram channel. And if you want to join the team at Stock Sniper Trading, visit our website, and you're welcome to join. There is promotions going on, lots of education with myself and Dave, and the live session schedules. So this is right now what we're doing. And then after 2 p.m., we're going to come back and do a little crash course on some wicks to finish off the week, okay? And then our free blogs are all over here. There's the importance of wicks in trading. Eldorado Gold, we did a little bit of security research here and breaking down what Eldorado is. The week's market outlook released on Sundays. Weekend trading routine. It's a Friday, guys. If you haven't read this one, I suggest maybe you take some time, 5-10 minutes out of your day today or tomorrow, read this. It might give you some ideas of how to do a little bit of weekend analysis and what to do with your trading plan, journaling, and how to prepare yourself for next week for the next week of trading. This was another one we did, a security on Eris Mining. These are gold mining companies, so the theme is gold right now, what we're sticking with, because gold is kind of trending. But blogs are good for education, okay? And let's get now into the charts. So this is gold on the 5 minutes. That's what I was saying. Like SST, we're looking for buys anywhere from 33.40 up to 33.45 in this range. We got to see maybe if we can build, but also let's not just go off of a 5-minute candle. Let's maybe do a top-down analysis and start from the top. Start off on the daily, work our way down to the hourly, and then finally come back to these 5 minutes, okay? And everyone on Zoom, thanks guys for joining. Good Friday, Juma Mubarak. Welcome everybody. Conrad, welcome. Bruce, good morning. Dale, thank you for joining. Christoph, welcome. Sang, Samuel, thank you for joining guys. Lukeman, Christoph, welcome guys. Thank you guys. Tony, welcome. Vinny, welcome. Okay, guys. And everyone on YouTube as well. Thank you guys for joining. We appreciate you guys. Beyond Technical, thank you for being the first one here. Thank you for smashing the like button. We appreciate it. Father Doug, Jake Roundtree, welcome. What's going on, bro? Armand, welcome. Thank you, guys. Everyone, let's get started, okay? Because it is 7:20. One more hour from now, we'll have COMEX market open. That gives us a lot of time to do a nice, thorough top-down analysis on gold and see how things are moving, okay? So I'm going to start off on the daily, and we're going to move our way down, okay? So you can see we've been busy with this chart lately, but now what do we see? We see a 3-day push down, okay? So 4 times it tried in that all-time high supply zone, and it got rejected for a 4th time. So there's our all-time high, 3,500 hit on April 22nd. And then when I'm talking about all-time high supply, I'm talking about this zone right there. Again, remember when I was talking all week, it takes sometimes just two volume bars to decide where the consolidated volume is, and then just get in the habit of stretching it into the future. Then you can see there was the second top also with the buyers coming in, and they got rejected back out. And then notice the size of the wick analysis. That's a rather large rejection. And then we continue to go into the future. There was the 3rd attempt when it came in there, and again they pushed it down. Look at what we had just recently. We came in here again July 22nd, last Tuesday. This week, this Tuesday, and you can see Wednesday, midweek reversal. Wednesday. Guys, get in the habit of learning how weekly volume flows through the market. Sometimes look at this week, for example. Like, we're not going back and we're analyzing 1 month from now or 6 months from now or 2013. We're analyzing this week. Take a snapshot of this. Remember what I'm saying. You got to create your playbook. Either I used to do it by taking snapshots with my phone, and then I started to I used it like a scrapbook, and I used to put them in there. I used to put all my setups, exactly like a coach of a basketball team. You know, when a coach has he brings out his full court board. He's got those things that represent the players. What kind of defense are they going to do? Are they going to do a 2-3 zone? Are they going to do a 1-2-2? Are we going to go man to man? You know, like, you got to have a playbook, and the playbook goes against your opponent, right? So you got to have something. Some coaches can do it in their head, right? But they got to illustrate it to the players on the bench and show them. So this is kind of how you can show yourself a playbook. Look at how this thing started. Monday was bullish. Tuesday was bullish. It came the 4th time in our all-time high supply zone. And then I always talk about a midweek reversal or a midweek continuation. We don't have a continuation. What is the other option? We've got the reversal. How do we know that? Because Wednesday is midweek, hump day, and it came down and it engulfed Tuesday. So this could give an indication that we're going to start to push down Thursday, Friday. And now you can kind of see what Thursday did. Lower low, lower high. And what is Friday doing? Lower low, lower high. Does that make sense, guys? Take a snapshot of this. This is your midweek reversal, and it's actually happened this week. So it's fresh. Get to know this pattern, and put that in your playbook. So now the question is, how much more are we going to push down today? Or are we going to find maybe a wick and start to push back up? That's going to be the ultimate question, okay? But when you find your 4th zone, do not stop. Stretch this thing into the future. What happens if we come up here again a 5th time, a 6th time? You know, finally, maybe, like, The buyers have been closing it above here, but then they pushed, and notice the date too. Like, look, guys, man, like, do you guys see how it can start just by doing a top-down analysis, and now it gets into an education? I try not to do this because everyone says, Ron, are we going to live trade or what are we doing? I'm trying to help you guys learn this stuff. Here's another one. Look at the time. Monday, big bullish day. Tuesday, big bullish day, closing up there. What happened? Did we get the midweek continuation? No, we got the midweek reversal. There it is again. You take a snapshot of this one. Wednesday, bearish engulfing coming back down. Thursday, we came in and they pushed it back down. And then Friday, you just had your consolidation and then it opened next week with the follow through. So there's the midweek, there's the midweek and the weekly move. Again, here's another one. Like you can see, look at this one. Know this playbook. Look at where they closed it on a Friday. And then we have the weekend and then news over the weekend. And then look at what they did. They reversed it starting the next week. That's why, guys, if you're holding positions over the weekend, especially with gold, with crude oil, with these volatile commodities and that can be impacted by war, pandemics, natural disasters, tariffs, all of these things, you have to be very careful with these. Okay. So I'm not going to talk about this anymore because you guys are going to get upset with me and say, come on, get into the trade. So I gotta go, guys. But I try to help educate as much as I can. Some people like it. Some people don't. I don't know what else to do. But when I see it, I have to point it out. Okay. So when we got the all-time high supply, stretch it into the future. Right here was a bullish flag consolidation. We had this marked from this week. I didn't mark this from today. If you guys go back all the way back to these live videos back in April, you will see what I was talking about. I had that bullish flag consolidated and I was telling everyone at that time, stretch it into the future. I have my saying what I do. Someone says, how far do we stretch it? I don't care. Stretch it as far as you want. Stretch it into 2026, stretch it into 2040. It doesn't matter. Stretch it into the future. That's what it means. Stretch it as far as you want. It's a static level until the volume comes and then starts to transact in there. It's got a high probability. It will continue being support as long as the bearish volume does not close below it. Okay. But if it does close below, you still got to understand there could be fake outs. You got to watch what's developing down there. You got to take it candle by candle. And you see when it closes below, they pushed it down. We got to our lowest point, that wick from our all-time high, 3,120. And that was on May 15th. So we have now our range. But look at just what was happening here. It came down. There it bottomed out. But look at where the candle closed. Closed all the way bullish back up here. So we're barcoding now. Bearish, bullish. Next day again came rather bearish down all the way down there. Notice the wick. It didn't come all the way down here or break for a new low. It's a higher low. And then the buyers brought it right back up, closed it right there underneath the green zone. But look at how the next day, Monday, next week started. Bullish ignited, continued to drive and close with bullish volume inside the green zone. And then one more time, Tuesday again, it came down here at the bottom of the green zone. Then we kind of closed right above it. And then look at what was the results from there. We came up to the third top. Then it made a higher high, higher low, higher high, higher low. And then it got right there, it got shut down. What happened right there, the Friday and then the weekend. And also, guys, another just quick little education lesson. Learn all about equal bottom lows and equal highs. Okay, they're called tweezer bottom or tweezer tops. They can give you clues in the market. Okay, even when we're scalping 1 minute, 5 minute candles, why would they not give us any clues on the daily? They're the same thing, the same characteristics. All wicks, all candles have they're the same characteristics. It's just different time framing. Look at when this one came down, it stopped right there, 3,247 and 16 cents. It did not transact in the green box. And then when it came all the way tumbling back down, look at where it stopped. It stopped exactly right at that yellow line. Like look at it. I'm not making this up. I would love to make this stuff up, but I can't. It's equal right there. So that's giving us a clue that the depth of market is not going down any further. They're protecting these lows. They're protecting this demand zone. They want to protect it to push it back up. They don't want to break it, because if you cause that lower low, that thing will change everything. It will change the entire depth of market above us. More offers will come in the market. Maybe these pending buyers will cancel their order and then place them down here because they want a better entry. That will completely change the entire depth of market. Okay, and so that gives you clues, guys. Please consider learning about those. The more you know, the better it is while you're trading. Okay, now let's get into this. Okay, so I already talked about Monday, Tuesday, and then look at Wednesday, big bearish candle coming down. Now let's just kind of follow off of yesterday's volume. We opened, came up, we're still below 50% of the big candle right there that kind of reversed the entire move, pushing things down. We opened yesterday. It was initially bullish. We came up lower high. They pushed down. They took out the Wednesday's low, continued for a new lower low right there, and coming right back up. So let's just follow. Close and open right there. Point of interest, daily point of interest, yellow line. Right there. The reason why I do this is to see if there's any gaps up or gap down. Sometimes you'll see that on daily candles. You'll see it on 5-minute candles. Right now, it's just a clean transition from the close to the open. When we opened, we were initially bullish on gold. So our opening price is $3,368. We pushed for a high. There's the high wick right there. I like to place a purple line at the high and the lows of the daily candles, 3,373. Around that 3,375 marker, okay? But we are now, we're still below 50% of the previous candle. Sellers are still point of control. Remember, we talked about this yesterday. And there's the lower high. Sellers are there. They're making a statement. They brought it right back down to the opening price. They had enough volume to continue to push down, fill yesterday's low. So let's just mark yesterday's low. It is a point of interest. That was the lowest point that gold dropped yesterday. And today, they actually pushed even further below it. Look at yesterday's low, right around 3,351 and a quarter, around that 3,350 area. And there's more selling volume that continued to break. And look, I don't even have a wick on today's daily candle. Oh, there it is. Okay, so we're right. As I'm speaking, we're basically at the lowest point of the day. I'm going to place a purple line right now just to show we're at the lowest point right now. It could definitely continue to push down, and let's just think logically now. So if it continues to come down, maybe right there. This is an important point of interest. This was last Friday's low, okay? So let's just place a yellow line right there, okay? Maybe it may come all the way down there today. That's around 3,331.30. Maybe it might be an equal bottom low, what I just talked about. They protect it from breaking down any further. Or it might just come down like halfway right there at 3,335 and get a wick there. And then it will be kind of like a higher low, and it's still holding above Friday. Okay. If it comes down and breaks Friday's low, then it's not just a wick. I've got 4 bodies here. I got a body, a body, a body, and a body. Now you get more of a volume-based point of control here. It's not just a wick. Now you got a closing bar, you have an opening day. You have a closing day, and you have an opening day. And a lot of this happened around 3,324. So I would say around 25 area. That nice, again, that's psychological numbers, 25, 50, 75. Notice how a lot of my lines are at the 25. There's 50. This one is 75. So it's at those psychological levels, okay? So that's pretty good enough analysis if we come all the way down. And then I can see right here, that bullish candle started, a bullish candle started, and then there's kind of like a bullish body. So if I was to draw like maybe below here, this is where there could be a lot of demand. The reason being is when I see this come in, it went right back up. When this came there, it went back up. This one broke, but then came right back up. If I continue to go backwards, this one came in and closed right there. This one in and closed up there. This one came in the green box and went back up. If I can now stretch it into the future, I see right there it came in and closed right there. It came in again and closed up here. This one came all the way down there and closed right there. So there's my big green daily zone down there. So if we come all the way down here today or maybe next week, that's where maybe the buyers will be to keep it from breaking these lows and then start in demand going back up. Okay, just like if this was 5-minute candles coming down, that would be like a 5-minute supporting zone that I would be paying particular attention for a quick little scalp buy back up. So if the daily candles come down there, it might be, I'm not saying a scalp, but it might be like a 2 or 3 day move back up. But if it closes below there, guys, just go through the motions. If there's a bearish bar that closes below there, you flip that green box red, it might come in there, and then they're going to target that wick, come down, they're going to target those two bodies, and then they're going to target those equal bottom lows there. If that can't hold, we're trading in the big green box. That's the one where big buyers are. That's where you'll see maybe a rocket ship come back up. Okay, but we're nowhere near that. So, but you gotta analyze, right? You gotta know your levels. Okay, so today is a massive bearish candle, right? If we're buying, we gotta understand we're trying to buy the lowest point of the day to push it back up. And if we do come back up, we might not come all the way. We might come just from this purple line to this yellow line. So I like to measure it, because if I'm counter trading and if I was to personally like buy right now and it comes right up to that yellow line, that's 125 pips. Okay. And I got to be disciplined to do something, because it could just come right up there. And look how much bearish volume is coming down on 3 days. They could kind of come right there, and then absorb all those buyers and then push it right back down. And then I piss away 125 pips and then they push it down to there. And now I'm in 75 pips of drawdown. Okay. So you got to understand, if we're buying, we're counter trading. If not, you can just wait for pullbacks and continue selling with this volume. Okay. But I don't just sit on the daily candles. I move now to the hourly and I continue to look for setups. Now, daily is very bearish. Okay, we're following a midweek reversal and 3 days are pushing down. So let's go into the 1 hour. The 1 hour. When did this all start? There it is. Remember we were talking about this yesterday, guys? I was talking this exact pattern. We were talking here on the hourly. There's your left shoulder. I said this is your funky head. Okay, I know it looks like two tops, but just consider this cluster of volume as the head, and then going back down. Now we're in our right shoulder, and what does the head and shoulder have a high probability of doing? Breaking down, which it did. It came right back up. Those were nice buys, just like I said. If we were to, if you go up, you're still going against the trend. Those are beautiful 2 hours of buys. You could have hit your daily goal, but if you didn't do anything, you want more and you want more and you want more. It kind of flagged, and then they're dumping it back down, and it's got a new lower low coming down. Okay, so the trend on the hourly back here, like if we go all the way backwards and all the way back in end of June, it's got that equal bottom low. It's got a higher low here, a higher low at the green box. This right here is considered to be a higher low. So if we're going overall, gold is bullish, but you can't neglect this. This is a lower high. Lower low, lower high, lower low, lower high, and a lower low. So we're currently in an hourly downtrend, but overall, it is still bullish. But still, what I do is I go with the current trend, and I look for opportunities at the bigger levels, like for example, this green box to buy. Okay, but this is the hourly channel we're in. You can see right there, came down, lower low at the bottom of the channel, kind of sideways consolidation. Okay, anytime you see that, if you can, barcoding, trap the volume to the best of your ability like that. That's what we call the sniper trapping gap. From day one, 6 years ago, this was the first ever webinar we ever did. This is our signature strategy. It's as easy as it gets. Sniper trapping gap. Okay, the reasoning behind this is volume is accumulating, and it only has 3 directions. Okay, it's very simple, very basic. If I was teaching someone how to trade today and trading and learning how to trade in 5 minutes, this is what I teach everyone. The volume will either just continue to consolidate in this zone, right? That has a high probability of doing that. Okay, then stretch the zone into the future. But eventually one side will accumulate. Sellers will accumulate or buyers will accumulate. Whoever accumulates more delta will continue the move. So for example, if the buyers closed it above here, maybe it would retest this and then we would start to move back up, right? The only other third option is if sellers accumulate, they would close it down there, what they just did, retest this, and then you get the drop, which you see what they did. So there's only three directions. When you see this type of flag, box it in, sniper, trap, and gap, okay? I see another one right here. Here was another one right there. You see how the bodies, it only takes one or two or three bodies, that bullish one, that bearish one, right there. That's it. You can box them in now. And then you see how they all stay in there. And then again, they'll either trade in here, they'll either close above here and retest this to the upside. I don't see that. What's the only other option? It closes below and then you see the push down, right? Now I don't see anything consolidating right now the last few hours. I see it coming down, see it going spin top, continue going down. I don't see any consolidated volume right now like to consider to make a buck. So you guys understand what I mean by this, okay? I'm giving you guys a lot of education here too. I don't know. I know that some of you guys appreciate it and some of you guys don't even give a shit, but I can't help it, guys. I'm here from when we started this with Dave. Our mission is to educate. Our mission is not to live trade. Okay, live trade is just we like educating in a live environment. I don't like making a video after the fact. Say you could have done this, you should have done that. I like teaching in a live environment so that you can see what happens in a live environment. If you have questions, you ask in a live environment. I can answer the question right away. Then you can understand, oh, okay, now I get it. Let's continue. Let's learn something new in a live environment. That's up to you. I know how to trade. I'm not being cocky or arrogant. I don't need to learn any more but I am a student of the game. I want to continue to learn. I want to absorb as much I can from the markets because I don't just trade gold and I don't just trade US 30. I trade other things. I do options. I do covered calls. I do passive income. I do all kinds of other stuff in the market. But you got to understand price action. You can't go trade options if you don't know price action. It goes together. So please, guys, consider your education very important in trading. Okay. Now, let's see the big move. When did this big bearish candle close below? What time? Time and sales is everything. This is an online auction. It was at 2200. This is 10 p.m. Eastern. Then I see 11. Then I see midnight. Now I start to see when it was consolidating. Midnight, 1 a.m., 2 a.m. is pre-London. Here's the breaking candle, the big bearish one that closed below with the new lower low. What time was it? 3 a.m. That's London. Okay. So we can kind of start to base some analysis off of London, okay? Right here, do I have like an hourly point of interest? Yeah, somewhere right around here, 3,360, I would say, 59.60. Why right here? Because look at the bodies right here. Like you got a body closed at 11 p.m., a body open at midnight, 2 a.m. close below, 1 a.m., 2 a.m. close right here. Here's London now. So there's London's open right there, and it's pushing down. So I can see that there is supply right here at those bodies right there. I could do like an hourly red box. I can see that London has been selling and has supply in the market. Are we ever going to retrace back up today? Like New York, what if they reverse this back up there? We're coming right back into London supply. That could be that counter pullback. And then London, that volume continues to sell it back down. If we close above London, we flip it green, that London block could turn into support, and then we're coming all the way back up to here. And we're not going to maybe just break out up to there. Why? Because we're coming right back into this consolidated zone. We had multi-hours of consolidation where it traded in here for 2 hours, 4 hours, 6 hours, 8 hours, 10 hours, almost 12 hours. 12 hours, guys. That's an entire half day of trading. So again, stretch it into the future. Okay, if it comes back in there, it might not just break out of there unless something happens. If there's a big catalyst in the market or news, it might just come back in there. And then what is it going to do? It's back in that zone. This is where it might do this, consolidate, and then maybe go back down. Or go back up. Remember the sniper trapping gap. So the volume might come back in there, okay? So it's important that's why I always stretch everything into the future, okay? And I leave it on my charts because the only thing that moves, the only thing that's variable is the volume. The volume, if you patiently wait, will come to you and just trade with the trend. For example, the hourly is making a lower low, lower high, lower low, right there. If it comes in there, what I'm going to do is I'm going to place an alert in there. An alert, that doesn't mean I just go trade blindly. I get an alert. Then when it comes in there, I watch what it does. Maybe I want to continue to trend as your friend. If it comes in there, it could be another lower high. Maybe I see like a double top and then it's ready to go down. Then I look for maybe a possible sell position right there. Maybe I initiate my sell. Then I adjust my stop loss according to the blocks. Maybe I just place it kind of above those London high wicks, but I would be targeting 50% of that candle. Maybe I would put my stop loss just above 50% of that. And then what would be my target for TP, maybe whatever the low was, and to break a new lower low, and let's say down there. Then I'm getting like a 1 to 2 on my money. I'm selling at a premium area where there was supply. I'm getting that counter pullback. Maybe the move is getting exhausted and now it's running into bigger offers, bigger sellers, and then the market can go down like that, okay? But the volume is nowhere near this zone, so I can't entertain that. But what I can do is I can place an alert in there, and if it gets there, it gets there, okay? That's how you can patiently wait for trades. Now we start to see on the hourly, we push down 4 a.m., okay? Now you see my yellow daily line. See, now what I do is I manipulate it. I move it down to represent 50% of this current body candle, okay? Because we got now fresh volume. So you see now how I moved it down? Look at what it is now. It's a Walmart price, $3,349.96. Rollback 4 pennies from that psychological level. Now I have an hourly zone. There's my wick. Okay, I don't even watch guys. I'll show you. I've been teaching this for years now, and it's getting to the point where there's 2 ways how to do this. I'll show you both ways, and you pick which way you like better. Okay, so the one way, the easiest way to do it is with the Fibonacci retracement from that hourly candle where it opened to where it closed, right there. Okay, what you can do is you can pinpoint exactly where 0.5 is, right there. $3,349.60, and then you can draw your red box right there, okay? Using the Fibonacci, using the 618382 zones. You see how I took out the 786 and I took out 236 because it's not necessary. Right there, I get now my zone. Okay, so remember I got my selling zone. I just showed you example up there from London. Now there's a block right here. It came in already at 5 a.m. and they rejected it back out with a new lower low. It came in again at 6 a.m., but with a lower high, didn't even come in the red zone, and it broke for a new lower low. It came back up right now, right up to these hourly bodies, and they rejected it back down, which created a low of the day with a new lower low, and we still have bearish volume, okay? So that is one way of doing that, how to identify that zone, okay? So remember, that's one way. Add that in your playbook. I'll show you another way how to do it. I scalp 1 minute candles, so I got to be fast at doing this stuff. I don't have time to bring out all these Fibonacci tools. So remember where I placed this, okay? I was guessing where 50% was of that candle, the align. So that's me guessing, approximately maybe right there, okay? Now, you see that first touch of that wick right there, that first wick that came up that didn't come into 50%? That's where you can start to make your zone right there and come up to the align, and then you do the same distance above, a little bit above, a little bit below, and there's your zone. That's the way how I do that if I don't have the luxury of using my Fibonacci tool, okay? So you can do it whichever way floats your boat, whatever is comfortable for you, okay? Now, we still are below that block. In order to get upside momentum, we need hourly to break this parallel channel, break that red zone, maybe impulsively or close above there. Then we flip it We broke the trend line, but now we come down to gather our buyers. We flip this to green, and then it might come in there, pick up those pending buyers, and then we're coming up to here. And then when it gets up there, it could come all the way tumbling back down. It could come down too, but then we got to find a fair value zone in here. Maybe we'll come down here, our 50%, our buyers are there, then it continues to do this. Then you're making a higher high, higher low, higher high, higher low, higher high, and you're starting to make a reversal, okay? But it could just come right there and slam back down. It could come in here, slam back down. That's why when it comes up here, you don't just trade blindly. You watch and see what's going on, okay? So I'm going to place another alert right there at that yellow line. If it comes here, I want to be alerted today. Maybe I sell that. Maybe I might get a reversal move there. Now, what's going on the hourly, okay? So relative, right now our lowest point of the day is right there. We traded below here on July 18. Do we have any structural areas on the hourly down in here that we can maybe identify? Look at right here. I've got a wick, and a wick, okay? And a body to body, okay? So I've got what I look for. Now, all I got to do is just place a line. For hourly, I use a white line. Do you guys see what I just did there? Okay? And I'll like, this is why, guys, it takes me a while to do a top down, because I'm kind of teaching everything what I do here, okay? So you see what I did there? Below the purple line, okay? I wanted to see the last time the hourly volume, when it was trading down here, what happened? I see there it hit that lowest point of the day, 2 a.m. Eastern, that's pre-London, and it came up very bullish. But see that wick where it came down? Went back up. See that one where it came down, went back up. You see that one where it came down, back up. Then I see there's also a body close and a body open there. I could continue to go backwards and look. See when that candle came down, it respected the white line and went right back up. So if it breaks now and comes down where we are today, if it breaks that lowest point of the day, purple line, it might come down and stop right there at that white line. It did in the past, okay? And it's 3,335. Another way how to do this, that's option one. This is the other way to do this. Sometimes I don't have the luxury on the 1 minute to look back at the charts and get that information. What I do is I read the tape. I'm the oldest trader probably in this group that still does tape reading. I guarantee you no one does tape reading. I'm probably the only one in this group, and I can say that with confidence, okay? This tape, purple, is the lowest point of the day. That tape, yellow, was from the top-down analysis. 50%. Look at, that's where I placed the white line due to wicks and bodies. If I didn't have the luxury of looking back, you could have grabbed your Fibonacci tool from that yellow line to that purple line and look at, see how close we were to exactly 50%. If you want to draw a little block in there too, you're welcome to. There's your block, right? You can go now, there's our block. We can make it green. If it comes in there, that might be an hourly block we've just figured out in the market, without a depth of market analysis, okay? So right there, guys, if we come all the way down there, maybe the bigger buyers will be there. Maybe that's it. They pinned the lowest point of the day, and now it's time to go back up. But we've got this bear spin top candle. It's still not enough to take a buy on the hourly. I would like to see maybe it close above 50% of this bearish candle, but more importantly, close above this body close, that body open, like 3,345. So that's why I draw another white line as a marker to watch up there. If it can get up there and close above, maybe we'll build, then we'll break out of here, okay? But it might just come back up, get a lower high, and continue pushing down. So that's what's going on in the hourly. We're in an hourly trend coming down. Like we're still in this parallel channel. You can see there's the parallel channel of support. There's the parallel channel of resistance above us. And this is the psychological midpoint, this dotted line, okay? Now what we can do is go into the 5 minutes, okay? So now we're really bringing it down. And you notice how I have all my lines on my chart. Like I got that consolidated zone. I know that this yellow line is a daily point of interest. I've got the red box there. I know now we're at the lowest point of the day. That was that hourly green zone. If the 5 minute candles come down there, I might be looking for buys. But the 5 minutes, they got also, look at what they're doing. Lower low, lower high, lower low, lower high, lower low, lower high. There's nice scalp buys, absolutely. But you're countering the trend. So you got to pip and dip. or do something, because if you don't, the market keeps coming down. Lower low, again, lower high, lower low, lower high, lower low, lower high, continuing lower low, lower highs, a lower low. But now we're at the lowest point of the day. We've had 2 touches on the 5 minutes at this purple line, and you notice the bodies are above here. So now I do my 5-minute analysis. This is my 5-minute supporting zone. I can see we came in there right now at 7:30, back up. We tested it at 7:35. Holding. We came in here at 740, and then that big bullish ignited candle just opened. So remember, that white line is hourly resistance. Right below it, there's the bodies. So I can see now I'm really kind of trapping the volume on the lower time frames right there. That's the 5-minute supply or resistance, whatever you want to call it, but it's located right below my hourly point of interest. So what I do is, again, stretch these zones into the future. And then now what I watch for is, can the buyers continue to build this, go up, or are they just going to come up here and then I'm going to sell that red box back down? Okay, so I see that it had a nice big move, came up, but it is technically, that wick is still lower than this red zone, still lower than there. So we're still pushing down. Like, even if I was to do a trend line on these kind of 5 minutes, you see how we're still descending down. It's still coming down. It's still coming down. It's still coming down. Okay, we maybe have to break through here for the 5 minutes. We might have to continue make higher lows, break through this, retest this, and we might have enough momentum to break that and then fill up to here. Okay, otherwise, maybe we consider continuing to maybe possibly sell with the market. It might need to consolidate here for a little bit. These 5-minute candles maybe need to continue to build in this zone right now. Okay, if they want to build, you know, we got our sniper trapping gap zone. Okay, remember what I told you, 3 directions. It'll either continue maybe trading in this zone for a little bit, okay? But we're smart. We know that gold is not going to stay in this zone all day today. It's eventually going to try to either break a little bit more to the upside, or it's going to continue trending down, okay? So remember our 3 options. It might break and close above here, retest that, and then we break out a little bit to the upside. We can maybe potentially look for some buys, and then also knowing we're buying against the trend. So if it comes up here, we got to go to maybe a break even. We got to maybe scale out some profit because we're approaching a bigger red zone and it's on a trending bearish day. Okay. But if we continue to trade with the trend, if we see a bearish candle close below that low of the day, we flip that, we could be coming down here. We could sell. But also too, when we're selling now, we're selling with the trend. Trend is our friend, but we got to know we're coming into an hourly demand zone. Okay. So it could come in here. We could gather maybe from 38 to 30, 40, 50 pips. But when it comes in there, we have to respect that because it could come back up. Okay. But if it closes below there and does that, yeah, we can continue with the selling. Okay. So, and then now finally, once I've done all of my analysis, I'm missing a few things here. I'm missing my SST daily bar indicator just for, to remind me that we opened right there. That was the highest point of the day. We have this huge selling pressure. Right there is the lowest point of the day. And now we're starting to make the daily bottom wick, but we still have a shit ton of bearish volume above us. Okay. So if we're going to go and buys, we got to understand, we got to be disciplined because that's on top of us. Okay. It's a big bearish day. Another thing, what you can add are your indicators. If you like RSI, MACD, stochastics, whatever you like. Some of you guys use main chart indicators like Bollinger Bands, or these main chart indicators. A 9 EMA is pretty popular with a lot of traders. It's this green line. And also another popular EMA is the 200 EMA, this purple line that's at the top up here. Okay. So it's almost 8 a.m. Okay, so we got another minute and 40 seconds. We're going to get a new hourly candle opening up. Hourly momentum will be entering the market. Hourly volume will enter the market. So what we can do too is you don't just have to sit on the 5 minutes. You can go back to your hourly timeframes and review the hour. Okay, so what is going on? So this hourly candle opened You know, it was initially bullish. It came into that red zone below the hourly resistance at that point of interest, those bodies, and they rejected it with a lower high. They brought it back down to the opening position. We came all the way down. So this hour has hit the lowest point of the day, and right now it's coming right back up. Okay. It's going to close in 1 minute. Still has bearish volume. So next hour could definitely continue to come back down. But when it comes down, we'll see at the purple line, will it make a higher low? Will it make a new lower low? Will it make an equal low? We will determine that, okay? If you look at the RSI on the hourly, I don't really follow this indicator too much because it's sometimes it's a very false indicator. It will force you to buy right now because it's overbought and it's in this red. It's down to 24. But if you were buying, again, you're not winning unless you're quick at those counter trades and you know how to pip and dip. Otherwise, it's still pushing down. So this thing could still continue to push down further, okay? So let's watch going into 8 a.m. open. Okay, so you see where the neckline is. We made a bottom, we came back up, we made a neckline, we're coming back down. Now what I watch for is higher lows. Will we come back down in here? Will it be an equal low? All of these things, okay? So we're going to stick with gold for a little bit because we're 20 minutes away from COMEX market and the commodities exchange, the gold exchange opening. That's going to bring some volume in the market as well. Do you guys have any questions about anything? Okay, that was an educational top-down analysis. When I analyze, I like to leave no stones unturned, okay? I like to do everything. This is how I do my analysis. You know, someone always asks me, Ron, how do you do a top-down? That's how I do my top-down. Exactly like that. I do it much faster than that because I'm not talking to myself while I'm doing it, or I'm not educating myself while I'm doing it because I know exactly what I need to be looking for. I hope that you guys can get to that point too, where you can do this half asleep. You can do this with one eye open. You can do this while you're smoking a joint or you're drinking your coffee every morning, okay? So it will become that repetitive. It will become that easy, and it's just going to become part of your daily routine. Just like when you guys go to your job every single day, you clock in, you clock out. Same thing I do. When I come in the markets, I clock in and I clock out, okay? That's it. I don't have like fun anymore when I'm trading. I just get in, I do what I got to do, I hit my daily goal, and I get out, okay? It's just like work. You know, it's just like going to work every single day. Yes, it's nice. I have the luxury of working in my home and doing those things, but it's just like going to work. Same thing, guys. That's how I treat it. That keeps me disciplined, right? Because you can get a little carried away with trading. I treat it as if it's my 9-to-5 job every single day. Hopefully it's only a 2-hour job, but some days, you know, you get in a grind session and then you got to go 4 hours. You got to go 6 hours. Who knows? You might have to do a marathon. But that's how the markets work, guys. You know, that's the truth about trading. You guys have basically been on a journey with SST for the past 6 years with myself and Dave. You guys see, we trade every day. We're married. We got kids. We're fathers. We're this, that. We do our daily things. We renovate our homes. We do other work outside of here. We take money from the markets. We put it into, we get that money working and making us more money so that the money works. And that's what I want everyone to be doing. Okay. Have that in your head. Think about that this weekend. You know, it's not always about fancy cars, okay? So if you want, go buy a fancy car. Buy a Ferrari, buy a Lamborghini, buy a Porsche, buy a Corvette, buy whatever you want. Whatever, or a boat, whatever. But in my opinion, I did those things when I was younger. It didn't get me any joy, okay? I drove a nice car, it was nice, but it depreciated in time and value. I lost money on it. When you buy a rental property, that home continues to appreciate over time. It's an appreciating asset. You can earn money through rent. They can pay off the mortgage where you don't even have to pay off anything. And then you build equity. And then with that equity, you can take some out of that home and get a home equity line of credit, take that equity and go get your second home. Go get your third home. Get the ball rolling. Compound. Before you know it, you might have 5 rentals. You know, instead of having 5 Lamborghinis, you got 5 rental properties. So but everyone is different. Everyone is different what they want in life. So, but whatever you want, stay focused, stay disciplined, aim for appreciating assets. I know it's hard when you're younger because everyone wants a nice fancy car, but if I could go back and I was 20 again, knowing what I know today, I wouldn't give a shit about cars. I wouldn't, honestly. I would drive a 1990 Honda Civic and I would be cruising and I would be happy. As long as I was 20 years old and I had 5 rental properties, I don't give a shit what I'm driving. Because I know when I'm driving to that bank and I'm looking at all those numbers in my bank account. I could care less about the cars these days. That's how I am. I guess when you get older, you don't care. I just want something that's reliable so I don't have to walk anymore. Jill, your third Lambo, you got a gray one, so I wasn't overstating stuff. That's yeah. I do like enjoy cars. Okay, I will be honest, but I'm looking more vintage. I'm looking more classic right now. I'm looking at getting maybe a '60s Mustang, just a cruiser. No, Danny, I wish I could pump up my local housing market. It's dead over here. There's homes here in my neighborhood. They were selling last year this time 1.8 million, Danny, and now they're gone down to like 1.2. I looked just recently. They've dropped big time. Global demo is my trading view, the free, or no, it's the paid version. The paid version allows you to get some perks with it. I like it for the alerts. I can add basically unlimited alerts on my charts. You can have more indicators and things like that. So yeah, I always tell everyone during I think it's November. TradingView always has like a Black Friday deal where it's like 80% off. That's where I tell everyone, get yourself a good trading platform. It's an investment, okay? You've got to have a good, sound trading platform. If it's 10, 20, 30 bucks a month, it's worth it, okay? It's worth it because I know the free version it's good, but the paid version, I'm not here. I don't work for TradingView. I'm not sponsored by them. I don't give a shit about that. But I'm saying you got to have a good platform, okay? Because if you do invest a little bit of money, you could get some return on that investment, okay? So it's a good investment. You know, I always say a coffee a day is what, $2 here. So I buy a coffee every single day. It's 30 bucks. It's cost me $60 a month just to buy coffee. If I cut my coffee and I make my own coffee at home, I'll buy that TradingView platform, and that's simple things like that. You forget about Starbucks and go and buying your. Oh my God! Can I tell you guys a funny story? Funny story. Funny story. I was watching. I was just scrolling through TikToks, and and there was a guy and his dad. It reminded me of me and my dad. My dad has like broken English, and this guy's father had broken English too. He was Asian, and he was at the drive-through, and the son was telling the dad what to order, and he was saying to order at Starbucks the itty bitty titty frocacino macachino, and and the dad was saying that in there. It was so funny. I had tears in my eyes. It was one of the funniest things I've ever seen. Even the person working at Starbucks was cracking up. The way how he kept saying it, the itty bitty titty frocacino macachino. It was one of the funniest things I've seen in a long time. But okay, let's get focused here. We got a double bottom right now. Okay, so it came down, coming back up. We see our resistance. Look, it came down. Okay, now it came down 2 times, but it's got a higher low, higher low. So that's telling us something. It is building. We got some good bullish volume coming in. We're about 11 minutes out of COMEX. Okay, so are we building a double bottom going into COMEX? Are we going to get maybe like a breakout, maybe a false breakout, then they come back down, and then we'll see, will they slam it down on COMEX, or are we building to maybe start to reverse out of here? Okay, so let's just continue to watch this. Remember SST, the signals, we're watching the 3340 area up to 45, so we're in this 40 area right now on the Discord signals. Okay, so right over here, we're still watching this area, this zone, the 33, 40, 45 area, okay? So this is how it looks on the charts. Nice, beautiful. Okay, so that is a technical double bottom. It came down. There's our neckline. Came back down 2 times, double bottom. Nice big bullish candle coming up. But is it going to get higher than that? Is it going to produce a new higher high? Is it going to close above here? Is it going to retrace back in here? Like, this is what I'm watching. Again, I'm looking at the clock too. We're 10 minutes out of COMEX. So if we do take a trade, or if I do take a trade, I got to know I'm taking a trade while going into COMEX. So it could come back and stop me out with that added volume, or I wait for COMEX market open. But maybe if it's a good technical pattern, I go on a buy, and maybe with COMEX, it continues to push the move up, and then I can benefit from it. But regardless, I'm waiting for a body to physically close above here. If it closes in the next 5 minutes, or if it closes when COMEX market opens, that's what I'm looking for, okay? But I also know in the back of my head that there is a big exchange opening up very, very soon. Ray, what do I think of COMEX open? Exactly what I'm telling you. There's going to be an additional volume coming into the market. It's the entire exchange for gold opening up. Like what we're trading right now is kind of like the futures, but the exchange for gold is going to be opening up. So there's going to be a lot of orders that are going to come in. The volume could get very volatile. You know, it could come down here again, take out the liquidity. So now we've got liquidity at the lowest point of the day. Okay, so maybe COMEX will come down there. That's why we got to watch for clues. Like, for example, if COMEX comes all the way down there, breaks the low of the day, grab that liquidity, then come all the way back up, then we could see a nice move to the upside. But what happens if COMEX kind of spikes, maybe comes up here, spikes the liquidity? Oh, no. It froze. Shit.